The Slingshot move is just beginning, but it's continuing. Last Thursday, it broke 36 bucks, and I said that this was a major event. And I showed you the cup and handle pattern that had been building for more than 45 years. And this means that we're going to be seeing some triple-digit silver sometime soon. But what is different this time around? You know, in many, many videos, I've said that that silver's really astronomical prices, the portion of the market where it starts to outperform gold, would come when there's monetary demand, when people want it as a safe haven investment, and they're fleeing dollars. When there's monetary demand, it's going to be big. And so what is different this time around? Well, you know, if compared to the 1980s, if you look at what's going on right now, the stock market is getting really skewed. The Magnificent Seven is now making up most of the, you know, it's been this way for a while, but it's gotten worse, where the whole market is very warped. And so this is going to be, whenever things get out of balance, they eventually come back into balance. It just takes a little while. So that is one of the factors. Another one, this is the U.S. home prices, and this is inflation adjusted compared to wages. And what you see here is one of the greatest real estate bubbles in history. But at the bottom pane here, we've got an excess overhang of inventory. And it's only been worse at the beginning of what turned into the global financial crisis back in 2008. This next chart, I have been presenting this since 2004. This is Dr. Robert Shiller's inflation-adjusted home prices going all the way back to 1880. And when I started showing this was way back in 2004 and 5. My very first video, recorded in 2005, shows this data, and that is when nobody knew who Dr. Robert Shiller was. He was just a Yale professor, and he wasn't like producing data for the Standard & Poor's and stuff like that. Nobody cited him or referenced him. And I was showing this data right where that red arrow is and telling people that we were going into the greatest real estate bubble in history. And that's when everybody used to say, oh, but real estate always goes up. There's nothing to worry about. And you know what the outcome was there. But again, look at where it is today. This is currently the greatest real estate bubble in history. And then we've got delinquency rates of multifamily housing. This is Bravos Research. And what you see here is that we are starting out we're going into a recession, and we're starting out this recession at rates that it peaked at, delinquency rates, in 2010. The global financial crisis was here during this recession, and the delinquency rates were very, very low, and they accelerated as everything crashed. And then we've got people falling behind in car payments, and this is huge. We're back up above the levels of the 2009 and 10 during the global financial crisis. So we're headed for a really bad recession coming up. And then Elon Musk retweeted this. It took over 200 years for U.S. debt to reach 12 trillion, and we added another 12 trillion from 2020 to 24 on top of it. So let's take a look at debt to GDP. This is from long-term trends, and what you see is that after the American Revolutionary War, to fund that war, we came out with the continental currency, and we printed that into oblivion. And the debt, it got up to about a third of the economy, a little less. And then we paid that down. And then the Civil War, Lincoln came out with, instead of the continental dollar, we had the greenback. And he paid the troops with the greenback, this fiat currency that was not the gold-backed dollar. And it fell by 2/3 in value. It took 3 greenbacks to buy a silver dollar or a gold-backed dollar. And then we paid that down, and then we established the Federal Reserve just in time for World War I and created this phony baloney gold standard with a reserve ratio of, they only had to have 40% reserve in gold, so they were able to expand the currency supply, go deeper into debt, and we got a little over a third of the economy one more time, and then they start paying that down. And then the Great Depression and World War II, and that peaked at 121% of GDP when the entire world was fighting for survival. And then we grew the economy much faster than the politicians could dig this pit of debt, and we got it back down to about 1/3 of the economy. Then we went on this thing where supposedly deficits don't matter. And now, where are we today? Well, let's zoom in on this, and we'll go to the Federal Reserve's website, and what you see is that we're back up at 121% of the economy, the size of the debt, and we're not in a world war. We're not fighting for our very lives. This is disastrous, basically. This is 6/5 for people that are into percentages. We are that deep in debt, and the problem with that is, as Tavi Costa points out, the public debt, the net interest payment to GDP is approaching 5% on just the federal debt, and that doesn't include state and local debt. And so that puts us in a hole, making it very difficult to climb out of this. Moody's has downgraded the U.S. credit rating, citing concerns over increasing U.S. government debt. And what's happening with the rest of the economy? Well, China's exports fell at the fastest pace in 5 years. Well, what does 5 years incorporate? It incorporates the COVID lockdowns. It incorporates when the entire world just basically shut down and nothing was coming from China. And so this is bad news for the economy, because all of those things that we import from China get sold at like Best Buy and all these other places. And then we've got the ADP average monthly employment change, and so you've got the average from many, many years past, and then in the blue bars here are 2025. And what you can see is January, it was way under. February, it was way, way under. March, it was about the same. April, it was way, way under. And in May, it was way, way, way under. And so job growth has slowed to where to me, this is big evidence that we are going into a bad recession. And when you couple it with all the other things that seem to be going wrong, and this rush toward gold and silver, I think that silver is in for some astronomical gains coming up very shortly.